It's been a tumultuous first quarter for the U.S. economy. Despite the country seeing a slowdown in its gross domestic product, GDP, numbers, the odds of a rate hike by the Federal Reserve at the upcoming May 2nd to 3rd meeting of policymakers have increased significantly. N official data released by the U.S. Bureau of Economic Analysis shows that GDP rose an annualized 1.1% in the first quarter, much lower than the predicted 1.9%. The slowdown was largely attributed to an inventory drawdown, but consumer spending did provide a much-needed economic boost. N inflation numbers then added to the Fed's challenge, with the core gauge of prices, i.e. the measure that excludes food and energy, spiking to a year high of 4.9%. This further indicates a higher possibility of a stagflationary environment in the U.S., where a weak economy is compounded with high inflation. N despite the expected economic downturn in the upcoming quarters, consumer spending data has remained relatively steady, and this has raised hopes that the U.S. could escape a recession for now. This is backed up by the drop in weekly jobless claims and continuing claims remaining largely unchanged. N in light of these developments, investors have been betting on a 25 basis points rate hike by the Fed next week, with futures trading putting the odds at a whopping 90%. This has been touted as a positive step by many economists, who believe that this could provide the U.S. economy with much needed stability going forward. N meanwhile, other data points have revealed a much bigger picture. Business outlays for equipment have posted the biggest decline since the start of the pandemic, with a 7.3% annualized decline. Although consumer spending continues to rise, the rate of acceleration is expected to slow down as the quarter progresses. N in addition, much of the consumer spending recorded in the first quarter was driven by an increase in food expenses, coupled with warm winter weather fueling purchases in the retail sector. Such reliance on government-driven measures are expected to lessen, and this could mean a further economic slowdown. N ultimately, the U.S. economy has certainly faced its fair share of challenges in the first quarter, and the Fed will have to weigh in with its rate hike decision carefully. A timely and prudent action from their end could potentially help the U.S. avert a recession if the nation's economic conditions take a turn for the worse.